Today I wanted to talk about 5 mistakes you can make as a buyer when purchasing a home. You always want to start from the beginning and not in the middle or not in the end. The beginning is basically finding out where you sit financially, what you can afford, and what you can bring to the table to benefit and make sure you get the most out of buying a home. Number 1 would be overbuying. Overbuying can occur because you don't visit a lender. You assume because you have a good job and that things are okay with everything, that the way your lifestyle is, that you just assume I can afford a $500,000 house, and you go start looking at $500,000 home and you're loving it. You're finding kitchens that you just adore, bedroom space, room, all these different nice features and everything like that. And then later on you visit a lender and come to find out you can only afford $500,000. Now, once again, because you get pre-qualified for $500,000 may not mean that you should purchase $500,000. So the best thing to do is gather up all your credit card debt that you owe, or any kind of debt that you owe, versus your income, and do the math, figure out what's left over and how much you can put towards a monthly payment on a home. So your monthly payment is really going to be what you can afford. Not so much what the banks say you can afford, but what you know is going on personally in your life and how much money you're going to have to be able to pay that mortgage and continue living a normal life. So looking at a home without a lender will usually leads to a bad taste in your mouth about purchasing a home, because you end up looking at things that are above what you can afford. And when you find out you can't afford it, it's kind of a letdown and it makes you back off from purchasing. And what happens when you back off from purchasing is real estate continues to fly. And next thing you know, you're paying 20% more for that home 6 months later that you really wanted. So the fix for this is to make sure you gather up everything that you know about yourself and your spending habits, set limitations on what you do, and go out there with an amount that you're willing to pay monthly and go see a lender and talk to them about that. Also bring up the amount that you feel you can afford so they can work with you to meet your requirements. Moving on to number 2, using the wrong lender. And when I say using the wrong lender, it's not so much the lender was leading you astray or doing anything malicious that you feel malicious towards you. What I'm talking about is maybe not syncing up with somebody that you feel you can communicate and say anything you feel. Remember, when we're dealing with big numbers or our finances, it's kind of a personal matter, and sometimes we feel maybe ashamed to share. So we want someone that can keep us right in that zone and helping us meet our goals into getting a mortgage to purchase the home that we're looking for. So you want to be comfortable with them, you want to match their personalities, you want them to feel comfortable with you, so they're able to tell you the things that they need to tell you to put you in the right frame of mind for accomplishing your goals. You also want to make sure that they are listening to what you are saying. So if your idea is to meet what you can afford versus what they're telling you to qualify, you don't really want someone that's just blowing you off and disregarding the fact that you're telling them what you can afford, and they're telling you you can afford more at higher amounts, but they don't know what your personal lifestyle is. So that's very important that you have that communication. You also want them to be able to advise you on your goals, not just giving you one path to meet your goal, but maybe multiple paths or ideas or maybe steps that you can take to meet your goals. So remember, the right lender is very crucial to meeting your goal in purchasing a home. Moving on to number 3. The wrong loan type. So there's all kinds of different loans, programs that attach to these loans, and different lenders can provide different types of loans. Some lenders won't do particular type of loans, so you want to ask if what type of loans they offer and educate yourself a little bit about each type of loan and see which ones will work best for you. A perfect example of this is the USDA loan. A lot of people don't even realize that the USDA has a loan for you to purchase a home. Yeah, the same USDA is the one that you're thinking in your head is the one I'm talking about. What happens in places like northern Colorado, where we had a lot of rural land, and there still is a lot of rural land and farmland, these places fell under USDA. A lot of these loans were used to help farmers buy land and things like that. But what has happened over time is the cities have moved out. Some small towns have connected, closing those farmlands, and they're now suburbs. And they haven't been updated as far as being qualified for a USDA loan. So ask about this find out if you have a home that you're particularly looking into. Ask your lender if it is in the area that qualifies for a USDA loan. The best part of this is a USDA loan has a zero down loan. So check with your lender on that as well. There's different time frames. You have adjustable rate mortgages. You have fixed rate mortgages. Fixed rate mortgages say it's going to stay the same throughout the term of the loan, whether that's 15 years, 20 years, or 30 years. You have adjustable rates, which adjust over time with the market. You have certain programs that go along with a 30-year loan, such as a 2-1 buy down, 3-1 buy down. There's all these little programs that can help you get in. And once you're in, you're there, you've met your goal, and you can keep just rocking it. So make sure you at least check on all of them to make sure that you're not missing out on something that may be better for you. For example, if you are a veteran and you're going to get a VA loan, it may not always be the best loan just because you're a veteran. You can still get a conventional loan that may offer a better rate or just work better for you in the long term. Different loans are going to have different fees at certain times, so you want to check on that and really know the fees, because these are going to normally get piled onto the loan and they are going to affect your payment. Okay, now moving on to something that's very important. Number 4 can cost you money. Okay, this one can cost you the home that you want. It can cost you money. It can cause a lawsuit to occur. But this is basically you failing to meet the requirements of the contract that you put into play. So when you put a contract on a house, it's going to say what you have to do in order to close on that home. And these are your responsibilities that you are responsible for. And if you don't meet them for whatever reason, it can terminate the loan, causing a lawsuit to occur because you signed a contract saying that you will perform to purchase this home and you failed to do so. So just keep this in mind. These are simple things that buyers make these mistakes and lose everything, and they shouldn't. Okay, so number 1, just big life changes across the board. Don't change your profession. And when I say profession, I mean the job type that you're in. So if you are a person that is a gardener, then continue staying as a gardener. If you do change to another business, continue being a gardener. This will not affect you. So if you are a IT personnel and you get a new job from IBM to Apple and you still continue to work IT, that's the same profession. However, if you're a plumber and then you decide to be a real estate agent, this will knock you back 2 years. Okay, so just keep this in mind. Don't make a big life change where you go change your job thinking because you're going to make more money, it's going to help you buy a house sooner. That's not the case. If you change a job, even if you doubled your money, it's still going to take you 2 years for you to get that mortgage to purchase your new home. So make sure you're asking your lender about any big changes that you may be making and how it's going to affect the loan process. Other things you don't want to do is you don't want to switch banks. Make sure you're staying with the bank that you've been with. You don't want to close credit cards. You don't want to open new credit cards. And you definitely don't want to purchase a brand new car. That will definitely make you lose your loan. Another big thing is you don't want to do is go on vacations or have big things coming up while you're going to be purchasing a home. And the reason for that is communication. Is you want your loan officer to be able to contact you and resolve small issues, small questions on the fly to not delay your loan. You want to make sure you're available at all times. So if the loan officer needs to just clarify something or get something out of the way, have you sign something, they can keep moving forward with the loan and it doesn't cause a delay affecting something like an interest rate that maybe you didn't lock in and then a month down the way, you're paying a higher interest rate by the time you're getting ready to close on that loan. You don't want to co-sign anybody else's loan. Don't be signing any financial documents that are going to put you on the hook for a certain amount. So remember, if it is your fault and the contract is terminated, you're liable for that. So number 4, even though these are just kind of things to make sure you follow, they're some of the most important, and you want to make sure that the lender also goes over this with you so you're aware what not to do while processing the loan. Oh, and one more thing I forgot about number 2. When I was talking about the wrong lender, another thing that you may want to seek out there is somebody that does one-stop shopping. So you find a lender that's not only going to process the loan, they'll underwrite the loan, and they'll close the loan. The good thing about this is the loan officer is usually right on top of everything because it's happening in-house. And if there is any question about it, they can find out with a simple phone call. Otherwise, if it's another person in another business, in another organization, they're going to have to make calls, leave voicemails, wait till they get back, and it can delay times. And time is of the essence when you're dealing with interest rates, especially nowadays. We just recently saw interest rates go within a small time frame from less than 3% up above 7%. So you see how that interest rate can really affect you. And the last part, number 5. Number 5 is basically keeping track of your credit report and knowing how your credit report affects you. There are a lot of tips and tricks for maintaining your credit and increasing your credit and making your credit the best as possible in order to receive the best interest rate as possible. Because just a 1% change in interest rate can add anywhere up to $400 to $600 to your monthly payment. So make sure when you visit the lender, ask them everything you can about credit score, all the tips and tricks they can offer you. If your credit is bad, a lot of times they offer means of fixing credit, and they'll put you on a program so you can get that credit fixed, so you have a little bit of time frame. And right now is one of the best times for that. When you have high interest rates, the best thing is to do is just sit a little bit and make sure you're prepping and being ready for when that interest rate drops, you can jump on it. A good rule of thumb to follow for credit cards when you have a lot of credit cards is to stay at the 30% range. So if you have a $10,000 credit card, don't go above $3,000. And if you are above $3,000, try to drop that back down under $3,000. Staying below that 30% will make it so that credit card doesn't affect you too much on your credit. However, if you're up there and you have $8,000 borrowed out on a $10,000 credit card, that's going to affect you in a bad way. Another thing out there is if you do have a whole bunch of credit cards and you still got time before you actually get a mortgage, is to consolidate that loan. So if you have a $1,200 here, a $300 there, a $4,000 here, it's good to just throw that into a big $5,000 chunk and start paying that. Not only is it going to lower how much money you are paying every month, it's going to show you as only having that one issue that you are currently resolving, making everything look better in your credit score. And one that a lot of people don't know about when it comes to your credit score, you don't want to deposit large cash sums into your account because this becomes questionable, and then the lender has to account from where this money came from, how much money it was, how it affects your overall processing of your loan. So follow all these tips 1 through 5 and you will be just fine in meeting your goals in real estate. That's all I have for right now. Don't forget to like, subscribe, follow, comment, all that great stuff. If you feel I'm providing you with great information, definitely you want to subscribe. I will keep creating more videos in the future, helping you meet your real estate needs. I'm Sunny in Colorado, and that's all I got for you today. Take care and have a great life.